Let's analyze some annual reports and 10Ks. Yes, it's the fun stuff. So what is an annual report? What is a Form 10K? Well, these are summaries of a company's financial performance over a year period. Most public companies file those and make those available on their websites to investors, to analysts. But Form 10K is a very specific required filing with the SEC, the Securities and Exchange Commission. A lot of times what companies do is they produce an annual report with a letter to shareholders from the CEO talking about how great the year was for the company, and maybe followed by some colorful and eye-catching charts and graphs and a few photos. And then a lot of times they go ahead and just include the actual filing that they did with SEC, the Form 10K, after that first section. And in that Form 10K, they're describing the business that they're in. They're having a discussion and analysis of the year's results, the MD&A, Management Discussion and Analysis. And in that part, that first section, or really the second section of Form 10K, they cover a lot of information. They talk about financials, risks, unusual events, talk about strategies and competitors without giving, obviously, too much away to competitors, but they do give you some great insights and information about the company's strategies and actions over the year and things they're thinking about doing in the future. And then you have the income statement, balance sheet, the financial statements, and those are great financial summaries. But for an interested shareholder and analyst, you probably want to give a little more information than is just on that summary financial statement. So what they do is they include notes to the financial statements in which, for those who are interested, they get into a huge amount of detail about the company. They get into very specific accounting approaches that they're using, depreciation, a lot of information about goodwill that we talked about in a previous video. Talk about debt, pension plans, tax, a whole lot of information. Let's go ahead and work through a couple of companies' summary financial and work through a couple of ratios that we can calculate as interested analysts of these companies. So we're going to look at two construction companies. This is Granite Construction and Floor Corporation. These companies are competitors, but they're also in slightly different businesses. So it will be interesting to compare their financial statements. We provided you with PDFs of the income statement and balance sheet for each of these two companies. And I just got those reports off of the company's websites, investor relations sections of their websites. And all I've given you is the downloads or the income statement and the balance sheet. And if you look at the PDFs that we provided to you, I've just circled a few numbers here on Granite Construction's income statement. We'll start with those numbers and we'll use them in our ratios. So I've just circled their total revenue, their gross profit, and their net income or net profit. And you can see that these numbers are in thousands. And let's take a look at Floor's income statement. They call it the Consolidated Statement of Earnings. Granite, called it the Consolidated Statement of Operations. They mean the same thing, just different names. And I've circled the same numbers that we looked at for Granite. So total revenue, gross profit, and net earnings. But here's something interesting. You probably noticed that actually I typed in the gross profit number on this PDF. And the version that you have doesn't have that 669,924 on it. Because for whatever reason, Floor doesn't give you that number. They're not obligated by law to give you that number. You can do the math yourself. I also wanted to take a look at the balance sheets. And here's Granite Construction's balance sheet. Couple of items circled. Total assets we're going to use in our ratios, so I've got that circled. And I also have commitments and contingencies circled, just to make the point that you see they refer to these notes that I was mentioning earlier, notes 20 and 21, for that particular line item. That line item, if you look across happens to be 0. But if there was a value there and you wanted to know more about what that meant, you could refer to the notes. And if you looked at the notes, you would see that note 20 talks about commitments, contingencies, and guarantees, including leases, rental commitments, joint ventures that they have, and partnerships, and then some operating lease and equipment rentals that they detail a bit more in that note, in note 20. Note 21, interestingly, is about legal proceedings. And apparently they talk about liabilities relating to legal proceedings and government inquiries. Apparently they've had those in the past. Again, a lot of information in the notes about these line items. As you look at all this information and wow, you say, this is BS. And it is BS. And what does BS stand for? Balance sheet. All right. In finance, there's not a whole lot of jokes, so we got to take them where we can get them. And here's Fluor Corporation's BS. And you can see that I've circled one number for Fluor total assets. We'll use that in our calculations. We've provided a ratio analysis worksheet to you in PDF form, the same thing I'm showing you on this screen. If you're going to go ahead and print that or at least notate it, we're going to calculate gross profit margin and ROA for both Granite and for Fluor. You notice too on this form, we also give you the industry average. I just pulled some numbers off the web. You can see the source, but just to give us a sense for how Granite and Fluor not only compare to each other, but at least at a high level, how they might compare to the industry overall. We'll talk a little bit about that. Let's go ahead and calculate some ratios. You can pause the video here while you do the exercise. Look at the income statements and balance sheets. Go ahead and calculate gross profit margin and return on assets using the worksheet, and then restart the video. See you back in a couple of minutes. Okay, welcome back. Hopefully you had tons of fun calculating the ratios. So here's how I did it. I just took the numbers off the income statement for Granite. So it's gross profit divided by total revenue. I get 11.7%. That is gross margin. Margin, if you recall, means the percent typically. If I do the same calculation for Fluor, look at this. I get a different number. Now that's pretty interesting. And you might ask yourself why. Why would Fluor's be so different, and in fact quite a bit smaller than Granite's? Well, it turns out if you were to analyze the notes to the financial statements and some of the details talked about, and if you knew a little about each of these companies, it would kind of make sense, because here's what's going on. Fluor is a company that does a whole lot of consulting. They do engineering consulting, they do project management, they include their engineering wages. A lot of the wages that Granite doesn't include, they actually included in their COGS. They also include in their COGS depreciation and amortization, which Granite does not. So you get some different, they're taking that out, which by itself would reduce their gross profit number. Does that mean one is better or worse? No, it doesn't really mean that. It means you need to further probably analyze what's going on with both of these companies to really understand why those numbers are different. Now let's go down to ROA. If I look at Granite's ROA, return on assets, I get a 2.2%. If I look at Fluor's, I get a 3.3. Now those are closer than their gross profit margin differences, but there's still some differences here, and it could be that there's some reasons why Fluor's ROA is slightly larger than Granite's. Fluor happens to, and it's interesting because if you do dive into the statements of Fluor a little bit more, you see that they actually have some assets that Granite doesn't have, you would think would actually drive their ROA lower. They include deferred taxes they have as an asset on their balance sheet. And I didn't see that on Granite's balance sheet. And deferred taxes are an asset because you get to use those as tax credits into the future, so they have positive value. But again, that should make the denominator even larger, which would reduce that percent, but it's not. It's actually, they still wind up with a larger ROA. Maybe Fluor is just using their assets better to generate profit. I know that Fluor does, as I mentioned, a lot of professional services. They do more of that than Granite does, which obviously, if you're doing a lot of services and consulting, you don't need a whole lot of assets for that type of work, like trucks and equipment. Granite has more of that proportionally. So that would skew Fluor's return on asset to the upside. If we look at the industry averages and then look at how both firms are doing compared to the industry average, it's kind of interesting because, if we look at gross profit margin, the industry average is 19%. Both are below a 19%. As well, if you look at ROA, both Granite and Fluor close to each other, but quite a bit lower than the industry average. Those are industry averages across all construction, including small residential, specialty road construction companies, contractors like that. Whereas Granite and Fluor are in certain specific areas, so maybe they shouldn't really be just compared to the overall industry. Granite does a lot of water, municipal type construction. They also just sell a lot of materials like literally granite, gravel and things like that. And Fluor is they're a global company. They do, as I mentioned, a lot of engineering services. So some interesting analysis that comes out of looking at income statements and balance sheets for these two companies. In summary, just to wrap it up, hope you enjoyed doing those analyses of Granite and Fluor. Annual reports give us a whole lot of great information about companies that we can use to track, how they did over time, but also to compare performance between companies, as long as we're looking at similar types of companies that make sense to compare. And we can access, for any public company, they have to make those statements available to the public because they are a public company. So you can be your own financial analysts by looking at any company. So what I would do, I suggest some homework. If you want to have some fun, listen to an earnings call. So you can download the annual reports of companies, but also a lot of times for their annual and even quarterly earnings calls that they do with analysts and shareholders, they make that information public. And on their, again, investor relations section of their websites, they will have available to the public recordings, or at least a transcript, a PDF of their annual reports. And Granite actually has a recorded webcast that you can listen to, and Fluor has a PDF transcript if you wanted to actually listen to the management team talk about and describe the company. That's always the first part of these earnings calls, is the management team, the CEO, the CFO, kind of give their spin in the first section of the earnings call, give a spin about the company, describe the amazing year that they think that they had. And then a few Wall Street analysts are allowed to ask questions, and that's when it gets very interesting. And you can learn a lot listening to these. So I actually do suggest that you try that out. Pick a company and listen to an earnings call. Maybe it's something you could do on a Saturday evening. So that's it. Finance is fun. Okay. Thanks a lot for listening.